Chapter 4. Legal Aspects of Banking. A. Negotiable Instruments Act, 1881. Definition. A negotiable instrument is a written document guaranteeing the payment of a specific amount of money either on demand or at a future date. Asterisk types of negotiable instruments. 1. Promissory note, a written promise to pay a specified sum to a particular person. 2. Bill of exchange, an order from one person to another to pay money to a third party. 3. Check, a written order directing a bank to pay a certain sum from the drawer's account. Asterisk key provisions. A. Endorsement and crossing of checks, specifies how checks can be transferred or restricted. B. Dishonor of checks, penalty under Section 138 for issuing a check without sufficient funds, up to 2 years imprisonment or fine. C. Holder in due course, protects a genuine holder who receives an instrument in good faith. B. Banking Regulation Act, 1949. Purpose: governs commercial banks in India and provides regulations on banking activities. Asterisk key provisions. 1. Definition of banking, Section 5, B. Accepting deposits and lending money. 2. Licensing of banks, Section 22. RBI grants licenses to banks. 3. Maintenance of cash reserves, CRR, cash reserve ratio, a portion of deposits banks must keep with RBI. SLR, statutory liquidity ratio, a portion of reserves in liquid assets like gold and bonds. 4. Restrictions on loans, Section 20, banks cannot lend to their own directors. 5. Audit and inspection. RBI has the power to inspect banks to ensure compliance. C. RBI Circulars and Guidelines. The Reserve Bank of India, RBI, issues circulars to regulate banking operations. Asterisk key areas covered. 1. KYC, Know Your Customer, norms, mandates identity verification to prevent fraud. Includes Aadhaar, PAN, and proof of address. 2. Digital Banking Guidelines, framework for mobile banking, internet banking, and cybersecurity. 3. NPA, non-performing assets, classification, loans overdue for 90+ days are classified as NPAs. RBI's prudential norms regulate loan restructuring. 4. Monetary Policy Regulations, CRR, SLR, repo and reverse repo rates impact banking liquidity. 5. Foreign Exchange Management, FEMA, guidelines, rules for foreign transactions and remittances. Understanding these legal frameworks is essential for managing banking risks, ensuring compliance, and protecting customers' rights.